Everybody, today is Wednesday the 23rd, and this market is starting to get pretty ugly here. It's definitely not a time to be a buyer. I know people like to buy dips, but this isn't a dip. This is a structural, defective, downtrending market. The volume weighted average price from this low is up next, and we're very close to that. Beyond that, we could put a VWAP off of this low or off of this peak. I prefer this peak because it's a little bit lower, and I think you've got to give extra room to the downside. So seems as though we're likely to be headed for about 412. That's still about 10 points lower, and nothing says that it has to stop there. We have, this volume weighted average price from that gap over there where these two kind of held. That would bring it down to a round number of about 400, and the volume weighted average price off the COVID low is around 380. So just don't be looking to be buying when we have a declining 5-day moving average, declining 20, and declining 50-day moving average. It's a great way to lose your money. The S&P came close to a new low and feels like maybe we'll get a little bit of a flush here in the near term. The NASDAQ, we're not getting any such bounce. Instead, it's just continued selling, which is why we don't try to buy dips. We're below the prior low, and of course that we remain below the declining 5-day moving average. So it's foolish to try to buy in that condition. We have a very clear message from this market. There's, people say, hey, the market's indecisive. It's not indecisive at all. It's more than decisive. It's adamant that there are sellers here. Lower highs and lower lows is the definition of a trend, and that's what we have on multiple time frames. To try to buy is foolish and a great recipe for losing your money. The Russell 2000, we know this is in a downtrend. The prior support turned into resistance. Now we've broken back down below these key levels, and looks like it's heading for at least a test of the prior lows, if not lower. This market is broken. It's hurt. It's, again, if we take a look at what we've looked at previously, which is the the Fibonacci, we've only come down to that 61.8% retracement so far, which was also tied with the volume weighted average price off the 2020 lows. There's nothing to say that it can't continue another leg lower down into 170. Whether that happens in a couple days, a couple weeks, or maybe, into the summer months, it could continue to bleed off. It's not just because of a war. It's not just because of the Fed. It's because of, a lot of things. But more than anything, it's because there are sellers in the market, and we don't need to know the reasons. Semiconductors are also breaking down, so that's a good thing. It's most likely, it's a good thing because, it gives us clear trades to take. I'm not rooting against the market. I'm rooting for a clear trend, and we have that. I don't have a bias that the market should go up to be a good market. If we're making money on the downside, then it's a good market for bearish operations. The volume weighted average price off of this peak looks to be likely tested again. And again, the volume weighted average price off the COVID low is down near 225. Nothing says it can't drop another 15% to go down and test that. Just because it's down a lot doesn't mean it can't continue lower. Were you shorting the semiconductors during this rally? No, you weren't shorting it. So why on earth would you try buying them when people are getting out of them? Biotechs have been a great example of the leadership to the downside. They rallied. They broke first, as we know, very similar to the Russell 2000. They broke support. That support was resistance. We saw a trend lower, rallied up to the year-to-date VWAP, and it's been a bloodbath from there, down another 10% just in the last week and a half. When there's sellers, you don't buy. Financials are starting to look like they're maybe topping out as well. It looks like a pretty easy guess that they would come down to this volume weighted average price once again near 37. And the energy names are the ones that hold up. They are still just kind of correcting through time, but they're the most bullish. But it doesn't mean that they're a buy, not while they're below declining 5-day moving average.